Do you want to invest in India's top 100 companies and market leaders? If you are someone who finds fixed deposits, mutual funds, stocks, and the likes complicated, trust me when I say this, you are not alone. It is all Greek and Latin to many people, but fortunately, finances are not rocket science. Hello and welcome. I am Prarthana from Clear, India's largest tax and financial services platform, and you are watching this video on Black. Many people want to invest for the high returns but fear the losses they would incur if they pick the wrong investment option. This is where large cap funds come into play. Large cap funds invest your money in stocks of large, well-established businesses that have a track record of consistent good performance. Well, in simpler terms, large caps are companies or stocks of the top 100 largest companies in India by size of capital. These big companies are resilient and don't crash too heavily during a stock market correction. Let us understand what are large cap funds. As explained earlier, large cap funds are equity mutual funds wherein at least 80% of their total assets are invested in stocks of the top 100 companies in India spread across different industries and sectors such as automobiles, IT, pharma, oil and gas, and so on. Top 100 companies are owners of some of the biggest brands such as Indian Oil, Titan, Hero MotoCorp, Asian Paints, and you use their products in daily life. In technical terms, large cap funds invest your money and those of other investors in top 100 companies by market capitalization. Market capitalization is the market value of the company. For example, Tata Motors has a market capitalization of Rs 1.72 lakh crore. It means that if all the shares of Tata Motors are sold today, then 1.72 lakh crore will be the money collected. As large, well-established companies have been performing well for a long time, there are lesser chances of failure even during tough economic conditions. Moreover, large cap funds spread your money in top companies across sectors, thereby reducing risk even if some industries underperform. You can refer to the large cap index chart shown on the screen right now. Also, here are some top large cap funds on the Black app by ClearTax. If you are new to the stock market or seek higher returns than bank FDs and gold investments with lower risk, then you should look at large cap funds. Large cap funds give you exposure to market leaders and top businesses. As these businesses grow bigger, so does your money, and you could become wealthy over time and easily achieve your main financial goals such as buying a house. I am sure by now you have understood large cap funds and who should invest in them. Don't you think you should learn more on the returns, risks, and ways to choose the best large cap funds? I can understand how difficult making decisions can be. Remember the toil we go through when selecting a gift for a special someone? Or what to wear for the next conference meeting? If simple things seem so difficult, financial investment selection can seem like a puzzle. But what if I say we have made it possible for you to simplify this selection process? Simply navigate to the Collections tab on the Black app. Wondering how to calculate the returns of large cap funds? You can choose the best large cap funds by downloading the Black app by ClearTax from the Google Play Store. Open the Black app and navigate to large cap funds. Just press down on any large cap fund whose returns you want to check. We have used Axis Blue Chip Fund Direct Plan Growth as an example. Now let us understand how to calculate returns of large cap funds by checking the performance of Axis Blue Chip Fund Direct Plan Growth on the Black app. Axis Blue Chip Fund Direct Plan Growth has given a compound annual growth rate or CAGR of 21.10% over 3 years. CAGR shows you the investment's annual growth rate after taking into account the effect of compounding. You can check the CAGR of the fund over 1 month, 3 months, 6 months, 1 year, 3 years, and 5 years. Well, a good large cap fund must perform consistently against its benchmark and peers over 3 to 5 years. Let's take a look at the performance of Axis Blue Chip Fund Direct Plan Growth against its category average. Select the time frame you want to compare, say 5 years, and use the toggle next to compare with category average to do so.
As you see from the graph, the dark green line shows the CAGR of Axis Blue Chip Fund Direct Plan Growth over 5 years as 21.56% against the category average of 16.24% shown by the grey line. You could scroll to check details of the Axis Blue Chip Fund Direct Plan Growth, such as the risk here is very high and the exit load is 1%, which are the fees AMCs charge when you redeem mutual fund units. Talking of lock-in, there is no lock-in, and the Morningstar rating is 5, which is a rating given by Morningstar where 5 is very good and 1 is poor. Talking of expense ratio is 0.47%, which is the total cost of managing the fund. Lastly, AUM 33,967 crore, which are the assets under management, and higher the assets, more stable is the fund. If you scroll further, you get to know who should invest in this fund, such as new investors for a minimum time frame of 5+ years to maximize returns. You must press on the compare with saving account and FD to check the performance of Axis Blue Chip Fund Direct Plan Growth against the saving account, fixed deposit, and category average. You can select the monthly SIP option, which is a facility offered by AMCs to invest small amounts regularly in mutual funds. Consequently, you can also do a comparison by selecting the lump sum option. If you press down on compare with category top funds, you see the other comparable funds such as Nippon India Large Cap Fund Direct Plan Growth Plan and UTI Master Share Growth Option Direct.
For example, the 5-year returns of UTI Master Share were 17.87% against 21.56% for Axis Blue Chip Fund Direct Plan Growth. Similarly, returns since inception called all-time return were 15.36% for UTI Master Share against 17.44%.
If you press on holdings and sectors, you get to see the top holdings of Axis Blue Chip Fund Direct Plan Growth. For example, this fund has 9.5% holdings in Bajaj Finance Limited. Similarly, you can select sectors where you see this fund has close to 40% in financial services. You can check the stamp duty, which is the tax levied on the purchase or sale of asset, which is collected at a rate of 0.005% on the overall purchase. Moreover, Axis Blue Chip Fund Direct Plan Growth has an expense ratio of 0.47%, which are the charges to manage the portfolio. This shows you the name of the fund manager and AMC. AUM are the total assets managed by Axis Mutual Fund, which is Rs 1,96,549 crore. Alpha measures the extra returns generated by a mutual fund over its benchmark index. Axis Blue Chip Fund Direct Plan Growth has an alpha of 5.41 and has outperformed its benchmark index by its value. The category average is minus 0.52, which shows most of its peers have failed to beat the benchmark. Beta shows the volatility of the fund as compared to the overall market, and equity mutual funds with beta less than 1 are less risky. This fund has a beta of 0.79 against a category average of 0.94, making it more resilient during a stock market crash. Returns generated per unit show you the amount of risk the fund takes to generate returns above the category. These funds give a return of 0.96 per unit of risk taken as compared to 0.61 for the category. The downside capture ratio tells you what extent the fund captures the negative returns from the benchmark. This fund has a downward capture ratio of 65.63, which tells you that the portfolio declined only 65.63% when the index declined by 100%.
Let's learn about the returns you get from the large cap funds. You can expect inflation beating returns if you invest for around 5 to 7 years or more in these funds. Many large cap companies pay dividends to their shareholders. These companies distribute a portion of their profits as dividends to shareholders. As large cap funds may invest in stocks of dividend paying companies, these dividends get added to the overall returns from your investments. Many people believe that large cap funds are a safe investment. Well, they are relatively safer when compared to investing in the stocks of medium-sized companies and smaller ones. But yes, they have their risks too. After all, they invest in stocks which can give you higher returns at higher risks. First-time investors in stocks looking for good returns with minimal downside risk and who don't want much volatility with their investments. These funds invest in stable, financially strong companies that can withstand economic shocks in a better way. In this pandemic situation, you can expect larger companies to bounce back or stay resilient rather than medium or smaller firms. It is suitable for investors who seek steady growth in their investments and can stay invested for 3 years or more. As these funds invest in market leaders across sectors and industries, you enjoy a multi-diversified investment that can handle an economic slowdown. You must invest in the right large cap fund if you want to earn good returns over time. Otherwise, you will never see good returns even if you stay invested for the long term. The table on the screen helps you pick the right large cap fund. Don't you think investing in large cap funds is easy? Well, it is for people who can select the right large cap fund. However, you can also invest in the best large cap funds through the Black app if you are new to mutual funds. You just have to invest in the collection in Invest in Market Leaders on the Black app and enter the exciting world of investing in mutual funds. You must have seen an assorted chocolate box where the best chocolates from different companies are put together in one box. You don't have to go around searching for the best chocolates during festivals as you get them in just one box. The collection in Invest in Market Leaders works on a similar concept. A collection in Invest in Market Leaders puts together the best performing large cap funds in one investment so that you can invest only in the biggest companies. You don't have to waste time and energy searching for the best large cap funds as they are arranged for you on the Black app. Many large companies are market leaders and corner a significant market share, dominating peers and competitors. Investing your money in these companies can grow your wealth. The reasons to consider these collections are: firstly, ready to refer list of top performing large cap funds ranked by returns generated. Secondly, detailed comparison of fund risk, return, and performance against category benchmarks. Then, feature of easy comparison of selected scheme with top large cap schemes, easy sorter by returns and minimum investment amount, and lastly, put the best large cap funds in collections in watch list to invest when you are confident, or instantly invest via SIP or lump sum.
Here are the names of 3 funds with their 5-year returns as well as the ClearTax rating.
The bottom line is, if you invest in market leaders and India's top 100 companies, you can begin your journey for wealth creation effectively. Thank you so much for watching. Take care.